We've been newbies once upon a time back in 2009 and through to as we built our portfolio. There's a number of lessons along the way that we've learned that we'd like to share with you. Firstly, there's a lot of conflicting information out there. We went to mortgage brokers, buyer's agents, property advisors in our journey, seeking advice in a step-by-step process. Then we ran into advisors who appeared to be on our team. However, they were more interested in selling us off the plan and house and land packages. There was a lot of lack of transparency on what was in it for them, and they did not say why these properties were right or not right for us.
And then we ran into advisors who were not forthcoming or would point us in the right direction because what was right for us did not suit their agenda. They would rather buy us in a location that may give them big commissions, but we would have paid the price for literally a lifetime on those properties.
And not been here talking to you today, possibly. Yeah. I don't think we would have been here.
And then we signed up to brand new properties. When we started, we had very small savings, maybe about 41,000 between us, and we lost 5% of those savings towards these two of the plan apartments. We felt depleted because every $1,000 counts when you're a first home buyer. Unfortunate that we pulled out of those deals in time.
So, and then we ran into buyer's agents who would just flick us a link to the property without any guidance on how the deal stacked up, why this property, what it offered, when in fact the location was poor in an area with high supply, with limited growth prospects. So there was no hope really for these properties even over the longer term.
And then we were shown cheapy properties in high-risk locations with high maintenance costs. The deals look good on paper, but there were no fundamentals to back up those deals.
And also I'd like to add, even today, there are coaches and people or property advisors who are actually not qualified to give the advice. They may not have the right licensing or whatever, but they haven't gone through the journey themselves. They haven't bought a property for themselves even, and they are trying to help other people what they haven't done themselves.
We were also sold the dream of number of properties rather than quality of properties, and we still see that in marketing out there. Just imagine buying times 250K properties in a poor location versus say 600K properties. And it's okay if you can't afford 600K. We're not saying you have to buy 600K, but just think of quality over quantity. Quantity may work if you can get both capital growth and cash flow, but not in a bad location.
Absolutely. Then they're selling the dream of an unrealistic property portfolio with no consideration of individual capacity to access finance. There are property experts out there claim or dish credit advice on how many properties you can buy. They are not taking into account your personal situation and your resources, because more often than not, we are asked by clients, so how are these other people able to build a portfolio, or how are they saying that you can buy X number of properties when that's not really possible? And also it's time in the market, plus finance and right property that makes it work.
And you may have also seen as newbies, we are being sold the dream of tax benefits with property. And our view is tax is just an icing on the cake. And overpriced property in a bad location will only set you back financially. It may give you the tax benefits now, but it will set you back. And then we had banks actually fix entire loans at rates at 7.7%.
That's right. And they didn't explain the risk if there was a better way for us. Like they didn't tell us that. Also, we had wrong lenders selected with the wrong loan structures. It only cost us about 2 million in additional property acquisitions in 2015, which may be worth more, if not $3.5 million at least today.
And we almost bought 2 other apartments in the worst location, which would have depleted cash savings and not grown in value. And what it taught was figuring out who was really on our team and on their own team.